So I'm looking at my internal ranges. I then get structure change, and then it was that sweep there that signaled me into the trade.
Yeah.
So that was my
They look
MSU.
cleaner when you go down on the lower time frame, right?
That was my MSU. And then I waited for... So I did have an engulfing down here, technically. That was my engulfing down there. I waited for that whole section of price. So you see that? So if you look at the real intra kind of 1 minute time frame, okay, I then waited for that little section to be engulfed, basically. Good day today. Matt, I know Sam had a good day. Did you have a good day today, Matt?
I did have a good day.
Yeah, what did you take? Gold?
We took GU.
Yeah.
I took a sell on that, and then I took
Where'd you sell
AUD
from?
CAD. GU. I sold. So
Asia
we
Sweet.
took. Is this GU? Yeah, I sold. Oh, you're on the 5 minute. Can you go to the 3 minute?
Yeah.
Let's see. When it took out
What time
New
was it
York
for you?
high. For me, it was 11:12.
11, 12, 4. It's about 4 o'clock. So...
Yeah. Okay. Right. Go a little
Around
to
here?
the right. To the right a little bit. Right there.
Ah,
I took
okay.
that sell right there.
That was a bold move. Talk me through your thought process there.
We took London high,
Yeah.
and then we ran up a little bit, and then we came down,
Yeah.
and then we took out a low to the left, or not a low, a higher low, and then we pushed straight back up, and then we took out the New York high that we created after taking London high.
Okay.
Then
Yeah, okay,
you
I
can see it starts getting choppy. I like the consolidation.
Yeah.
Consolidation's a big key for me. Then we make a move straight down.
Yeah.
And then we kind of come back up again. We kind of consolidate, and then I had a vector candle on the 3 minute on my chart after consolidating and that push up. So it was a quick scalp though.
I was gonna say, you do know that is a risky maneuver you took there.
Oh yeah, it's a scalp.
Okay,
I
cool.
wasn't looking to take it far. AUD CAD was my big one for the day.
Nice. What, long, short?
I took a short.
Okay.
So
London?
for me, we were overextended from London, so we
Yeah.
kind of just started pushing up.
Yeah.
And then on the 15 minute, we touched into a POI.
Yeah. See that? Yeah.
Yeah, we touched into that, and then if you drop down to the 5 minute, I had an M pattern, as you can kind of see there. It kind of creates an M right there on a little smaller. If you zoom in on that high it made, kind of creates an M. And then for me, I had a vector candle on that engulfing.
Nice.
And then I took a short on there.
Are you still doing? I can mix up with everyone's strategies, but you're getting in and out of the marketplace quickly, aren't you? Right?
Yeah, it's usually a 1.3.
1.3. Nice.
Yeah, but none of them were. So I kind of have a scalp strategy, and then I have like an A plus. None of these were A plus, so they were all scalps.
Okay.
So I'm up like 1.2%.
Happy days. It's good.
Yep.
It's a great day. It's a great day. I think we need to stop. As traders, I think social media is just fucking ruining it for all of us, right? Social media it fucks with our expectations. You've got to look at this like a long term. So if you put your money into any investment fund, like if you gave $1 million to, one of the largest investment funds in the world, whatever that may be, right? My partner works for a wealth management company, and they give average returns of 12% per year. So, I think the Instagram kind of social media trader mentality has really fucking ruined the mindset for so many of us. You look at 1.2 there, and even Matt, there was that little touch in your voice. You were like, yeah, it was all right. I had a 1.2 day. 1.2% is fucking amazing. Some big funds, they're doing 1% a month, and they see that as good. So if you can do 1% a week, you're better than any hedge fund, pretty much.
Yeah.
And I think, we need to stop vilifying these little results. I've had my own kind of little tweaks recently where, we're getting some of the boys in. Warren, you good? Chris, you good? Nice to see you.
Yeah, good night.
Nice to see you guys. Yeah, so I'm putting some of my own little tweaks in at the moment where, I've kind of... I've had a bit of an up and down kind of few months. You know, I've been making profit, but not what I have been kind of at the start of the year. Let's just put it that way. I failed a prop firm challenge about 3 months ago or so, and I'm currently stuck in phase 2 of one I started kind of 2 months ago, which is slow for me. And you know, look, we're all human at the end of the day, and I've had those same frustrations where I'm like, I'm finishing the day on 1%, and I'm like, oh no, shit, I need 2%, I need 3%. And then my frustration leads me to overtrade the next day, and what happens? I overtrade, and I blow 2% or 3%. And I've done that a few times recently. So, you know, if that's happening to any of you guys, and you feel like you're not getting the gains that you want at the marketplace, look, first things first, don't stress, okay? It's part of the process. You know, even me as a funded trader, I still go through those same frustrations. All right, Anton.
Sorry, mate.
That's all right, mate. Yeah, I still go through those same frustrations, just like you guys do. But one thing that I've been doing recently that I've found is working really, really well, and the reason why I'm doing this is because I'm doing some new data work, and I'm going to explain to you why. This is what this webinar we're going to talk about. It won't be too long of a session, so you guys will be off probably about 20 minutes or so. But I'm going to give you all something today that you can take away with you that's really, really cool and really, really clever. Okay, so what I'm doing with my trades at the moment is I'm trading now twice the risk that I normally used to. So instead of going in for like 0.25 or 0.5, I'm going in a trade at 0.5 or 1%. Okay, and I'm taking most of my profit off somewhere between, and I haven't got a fixed target for it. I do it based upon price action, because you know that's one of my issues that I've had is I'll set a fixed target. Let's say that fixed target is, I don't know, 3R. I won't get my 3R, and I see this sort of noise happening in the marketplace, and then I get a pullback, and then I close it down here, and I close it down here, and I end up with 0.8, and I'm like, shit. And then I get frustrated, and the next day I over risk, or I take a trade I shouldn't have taken, and you know, look, you will know the cycle that happens. So now I have a fixed target between 1 and 2, and basically I just trade on how I feel. Like if so, I took this profit out here. My target was at 2, and I took my profit out at 1.8, so just after. So I had, I'll show you my kind of play-by-play. Price was coming up, moving really, really nicely, and then it started pulling back with the New York Open, and I was like, shit, it's going to reverse on me, because we had that big bearish move on Monday, as you saw, and I was like, shit, it's going to reverse on me. And then we had this really big bullish move up here, and this really big bullish move, and ultimately I came out there because I was like, right, yes, it's moving well, but I don't know where it's going to go to. Is it going to fill in this gap and reverse? And as you can see, it did. It filled in the gap, then a little bit more, then came back on us again. 230 pullback. So I've been doing some testing recently on something. I want you to start looking at the hour between 2:30 and 3:30. Do any of you trade that at the moment?
Yep.
Yeah.
No.
Yeah.
I'm aware there's usually like a pullback or some kind of move at that time though, right?
Yeah. So
if that's where you're going.
You're looking for a pullback or a liquidity move of some kind. So in this example, ultimately we had a liquidity sweep, and then you obviously had a big sell-off there. We also had a pullback, which was at 310. So between 230 and 330 in the marketplace, there's a big injection of liquidity. And if you look at, you know, almost every single market, okay, especially the major pairs, this happens almost every single day. So today's example was really, really good because it came down, swept liquidity below that order block. So there was an order block sat there, you can see.
That was my trade from today, wasn't it?
Was it?
Didn't even realise.
Lovely, yeah. So came down, swept liquidity of that order block, okay, and then pushed off. That, you know, where you would have gotten into that, I mean, up to you. Let's see if we got a lower time frame entry on it. Let's see if we get it. So we can probably class that. Yeah, we can probably class that. It's a little bit messier than I would like it to be. The confirmation entry's up there. you could kind of class this as an MSU, but it's a mucky one. It's not the cleanest, you know. And sometimes we don't need to overcomplicate it, guys. We've got a bullish marketplace that's moving really, really bullish. It's came and swept some internal liquidity. It's tagged into that imbalance and it's rejected away. You know, sometimes you don't need, you know, the ISC MSU setup. You know, don't. If you want to be really, really strict on stuff like that, you're obviously, you know, that's your prerogative. But you'll notice with some of my trades, I'm not often as strict on things like that. My ideal setup is my ISC MSU, but if I don't get that and I have everything else, so I've got liquidity, internal liquidity, resting liquidity, imbalance, I've got momentum, I've got everything else I need to take a trade. Sometimes just a simple engulfing like that, you don't really need much else, do you? You look at that setup right there, it's pretty clear where that market's going to go. Bullish market, it's been moving bullish for days and days and days. We've got bullish market conditions. We've already had a bullish London. And one thing to understand with the pullback, okay, is the way you can kind of tell the direction of it is it will usually follow on, and usually, like we say, so most of these things, it's like 60%, 70% chance of it happening. It will usually follow the direction of London. So if London's been particularly bullish, then you're looking for a pullback, bearish, and then a continuation. Okay, I'll go back and I'll show you a few. Let's get a clear London. Okay, so this is a good example. Bullish London, big old pullback right down to 330, and then a continuation. Okay, this one here, not very clear one, but you can see that same move there, 230. See the same move here, 245. Bullish London, okay, pullback at 230, and then a continuation. We don't get any new highs until the next day, but we do get those highs the next day. So go back and test this, guys. This one here hasn't really given us anything. This is where, when you've got kind of consolidating market conditions, you're not going to get great ones. This one we've had, again, not really a great one here. Yes, technically you've got a pullback there, but it's not very clean. This one here, so you've had a stagnant London, you have had a pullback at 230, but it's not really done much with it. Okay, this one here, London's been pretty shit on these days. So London here, you've got your pullback there at 230, okay, and then yes, it's taken a couple of days, but it's continued on. Okay, so go back and do your testing on it. I'll probably release a module on it and just whack it in the course as one of the additional modules for you guys to look at. But the 233, so between 230 and 330, you're looking exactly for a move like this. Okay, and where this will really help you is that a lot of you might already be in positions. Unfortunately, I hit my target and then I got stopped out on that one, as you can see. So I got stopped out for break even. So if you're, let's say you're still in a position, I think where you can use this, if you're already in a position, is not panicking that this is going to reverse on you. Okay, and like Sam did today, you can then jump into that trade and take 3R out of it, right?
Yeah.
Lovely little trade. Well, and you sized your position well, didn't you? Just as we planned in your one-to-one.
I did, yeah, to the T.
Yeah, to the T. So 0.25 was the rule. Nothing bigger than 0.25. And what did you do?
1%.
Took a 1% trade. I mean, look, I'm glad it's paid off for you. But imagine if it hadn't. Imagine how upset you would have been.
Telling you got it right. Fair enough, wouldn't I?
Yeah, you would have done, to be fair. I don't think you would have told me.
I would have.
I think I would have had to find out when I went through your journal next time. Like, what is this? Why is there a massive 1% loss here, Sam? So yeah, we got a little sidetrack there, but yeah, 230. Okay, just 230, 330. Keep an eye out for it. Matt, how do you use it, dude?
What, the time?
I think you said, yeah. So when I said that first, I think you said you use that window as well.
I was just saying I trade in that window.
Oh, you trade in that window. Okay. Yeah.
Yeah.
So you don't specifically look for anything in that hour window?
No. All I know is that my moves come later in the day. So I don't know if a lot of you trade when I trade, but around 9:30 to like 10:40, 11 o'clock for me is like prime. A lot of big moves happen there.
Yeah, so that is that move. So 9:30
so there will
is
be
2:30
fakes,
for us. Yeah, so that's exactly that time. And that's why, is that there's an injection of liquidity. And yeah. I'll get some more facts and figures on it for you guys because it's still very new to me as well. It's just something I noticed, and I was doing a bit of kind of just YouTubing the other day, and it looks like it's a window that's often traded. So I'm going to get all the facts and figures for you guys. I'm going to backtest it properly, and then I'll get to have some data to show you, and we'll go through it in a module and all the details. Anyway. So yeah, we were talking about profit targets and things like that. So for me now, I'm staking a lot more. I'm staking about twice what I usually would. Meaning that if my trade gets to 1, I'm at a profit target that I'm relatively happy with. So what I'm then waiting for is like something like 1.6, 1.7. I'm then closing like nearly 50% of the trade. That hits my daily target for the day, and then I'm out. And whatever happens next doesn't really matter to me. So in this example, I got stopped out break even. The maximum that I'm monitoring is for 4R, and I'll show you why in just a minute. Okay, same with this one. Maximum I'm monitoring is 4R. So I've got a new data sheet that I'm going to give you all access to, and I want you to start plumbing into it every single time you take a trade. Over the next kind of 2-3 months, just plug it into here. We've got 4 or 5 trading days in a week. I think most of us are probably taking at least 1 trade. So we've probably got at least 5 trades a week. So my thinking is that by in about 20 weeks time, 15-20 weeks time, we should all have about 100 trades filled out on this strategy spreadsheet. Okay, I'm going to show you exactly how it works. It's not mine. It's similar to mine. If any of you've seen mine, I think Sam, we went through something similar to this. So it's basically a slightly more advanced version of this. I got this off a geezer called the Money Engineer. Really clever guy. So this is how you use it. Okay, I'm gonna get rid of mine. So I've only started filling it out last couple of this week basically. So it's still very new to me as well. So long story short, you put the date in here. Let me just lock this top. Freeze. 03. Okay. So you put your date in here. There. Okay. You put the pair. So whatever pair you traded. Pretty simple. Okay. Then you put your sequence in. Okay, and I'll talk you through what the sequence is in just a moment. And then you put your result. Okay, so that's whatever you took out. So you can see on this trade yesterday, I got 1.8 out of it. That's where I took most of my profit out of. It then gives you all the stats you need. So it gives you your return. So that's your total R returned. Can everyone see this clearly, or should I zoom in a bit?
Yeah, it's fine.
Yeah, I'll zoom in.
For me, anyway.
I'll zoom in so it's a little bit clearer. All right. So you get your total R out of it, and it also gives you then your win rate. So right now, because I've only got 1 trade in there, and sorry, with all of these, of course, it's giving me a 60% win rate. If I delete all of that, it'll give me 100% win rate. Okay. A break even is classed as a win. Okay, so if you get a break even, it's classed as a win, and this probably stings you guys. Sometimes if you look at your stats on your prop firm challenges, you see like your loss rate is a lot lower. Basically, if you set your trade target to break even, because of commissions and spreads, etc., you'll normally get stopped out for like minus a penny, right, or minus a cent. Yeah, you've seen that before. That goes down as a loss. So if you want to get a really accurate view of your strike rate, and you're wondering why you're only getting a 30% strike rate when you feel like you're winning more trades than that, have your break even point just like a pipette or 2 above. So for me, I'll normally leave my break even point is like £1, so $1 or £1. Okay, so even with a little bit of spread and commissions, etc., I'm still probably profitable on that trade. That then classes as a win. Anyway, that's another note. Put 0 in here for a break even, and if you lose, it's a -1. Okay, so -1R. You need to make sure that you're risking the same on every trade. That's really important. If you're not, for example, so let's say I take twice as much on my gold trade, it has to go down as a -2. Okay, if you want these numbers to be accurate, that is. If you're not that fussed and you're just trying to work out what your strategy performs at, then just every single trade that you take, regardless of what you stake, comes out at a 1. Okay, so that trade came to 2 and then went to 4. Okay, this trade was a winner as well, so I'll show you how I fill it out. Okay, so this trade, I got taken out that at 1.6. So this is the sequence. Okay, every trade starts at 0. I'll show you one by one. Every trade starts at 0. Okay, and then you monitor how high it goes, okay, before the first pullback. So this trade went to 1.8. You see that 1.8 there? 1.88. So this trade went to 1.88 or it's probably 87. Yeah, 1.85 before the first pullback. So you then, very simply, you go back to that. So you'd go, so it's this trade here, so zeros first, then you go 1.85, okay? Then you do whatever it comes back to. So in this example, it's come back to 0. We'll class that as 0. It's a little bit over, but you can see we'll class that as a 0, okay? So we'll put a 0. And then you put wherever it goes to next. So for me, I'm monitoring up to 4R. Okay, so this is incomplete at the moment. If this trade gets to 4R, which I assume it probably will, what I then do is I put a 4 in here, okay? If, however, as you can see some of these down here, they have -1s. If they lose, so that trade comes all the way back down from here and then comes down to your stop loss, okay? Then you put your -1. That's where you use -1. Long story short, what these formulas are then doing is they're showing you, okay? They're showing you, so you see it takes a little while to calculate. They're showing you where your strategy performs best, okay? And Sam, this is very, very similar to the spreadsheet that we used previously, if you remember. But what this factors in now is break-even points as well. This is why it's slightly more advanced. So column 1 goes to 1%, but never break even. So how many of your trades are going to 1%, but they're never going to break even? Okay. This column goes to 2%, but never break even. This goes to 2% and moves to break even when your trade gets to 1%. Okay. Now, if you want to, you can edit these formulas. So you edit them by changing them here, I believe. Yeah, okay, so the simulate take profit is all in there. So let's say you want to test what it is going to break even at 1.5, for example. You would change that to 1.5, okay, 1.5. And then if you've got some Excel knowledge, you know how to copy a formula. You take that little draggy tool down there and you just drag it down. Okay, and then all of these trades now will count break even as 1.5. Okay, so I'm going to keep mine at 1 because that's how I've set up my spreadsheet. So you can edit this as you want. You've then got 3% and no break even, 3% and 1 break even, 3% and 2% break even, and then 4% and 2% break even. Okay, so if I want to monitor now, so I want to insert a column to the left. And I'm going to take all of that data, right? And I'm just going to copy this across like that. Okay, so that's now created me a new formula. And I want to test what it is going to 4%, but break even at 1%. I need my sums corrected. So why has that not worked? Simulate profit. The cells have not been locked. Oh my God, absolute amateur hour. Right, so that should be F4. Cancel. Right, okay. Sorry guys, that one I want to copy. Okay, cool. Right, I've got it. Sorry, I'm just doing getting these all updated so that when I send it across to you guys, it's all correct. So what I'm doing basically is I'm locking this cell, okay? So it's always going to look back at C4 for your trade sequence, and that's what's wrong here, basically. That's why that didn't show up there, okay? That one there. Okay, cool. So yeah, so if I want this to look at 4, so 4% profit, so simulate take profit 4, and then simulate take profit is 1%, okay? that down. That's then going to look at all of my trades and then work out which ones have gone to 4%, on the basis that I have set my break even at 1%. Does that make sense, guys? Do I need to make it any clearer? I know that Excel is not everyone's forte.
Yeah, it makes sense to me.
Yeah, it makes sense. Yeah. So the beauty of this is that it allows you to test break-even rules as well. That's what my spreadsheet didn't do. My spreadsheet was very similar to this, and it allowed you to test profit targets, but it didn't test break-even rules. Okay. I'll send it across like this. Does anyone need or want?
Before you go on, check. What do these represent then?
So that's the amount of R your strategy has returned in total.
Okay.
Okay.
That's based off the trades.
Yeah. So
that's what you actually took.
Based off the trades that at the moment it's based off all of these basically.
Yeah.
Okay.
Sweet.
So if I take those out, you'll see it all up. It will update all the figures. Okay. So if we just look at, let's move you guys down for a minute. So if we look at the strategy based upon these trades here, okay, so these are the actual trades that I took. So I came out of this trade at 1.64, so that was my win, 1.64. That's not right, is it, fellas? Is there data in there we're missing out on? I'll work out why that isn't working. We'll do it another time. Just trying to work out whether I've done something wrong. Anyway, I'll work it out and I'll send it across to you guys. Yeah. Does anyone need any more columns than this? Do they think?
I'm not sure, man. Have to try it out.
Okay.
Well, it's pretty simple though. We could watch this video back and figure out how to add a new column, right?
Yeah, exactly. So yeah, you can watch it back, or I can help you. We can jump on a quick chat and we can do it. It's no problem at all. All right. But what we're basically monitoring is how many of these trades. So for example, if I just take out, for example, this one that went to 4, because we don't know what the actual finished result is yet. Okay. All we know is that it's come back to break even. Okay. You can see that. And then we'll say it went to 2R, for example, okay? You can see here, the strategy column here, where it went to 2%, okay? But we set a break-even rule. You see how this one's recorded as 0? So what this is basically saying is, if you're choosing to go to break-even, at 1%, then this trade has gone over 1%, it's come back down to 0, which means it's taking you out, so it doesn't count it in the results. So let's say this was your results over a long period of time, whatever it may be. Okay, right now it's showing me that actually my safest strategy right now is going for a 4% profit target and going to break even once I get to 2%. Okay, because that for me is my safest profit target. And you see on this one here, using this example again, I hadn't gone to break even on this trade because the first push up only went up to 1.85, then it came down to 0, but I haven't gone to break even on this strategy. It's then gone and finished at 2. So that's actually recorded me a 2. So long story short, it's just a really good way of you kind of analyzing your data. The way that you're going to get good at trading, consistently good, and you're going to really refine and work out where you are profitable and where you aren't profitable is by analyzing your data effectively, okay? Really annoyed this isn't working.
Yeah, I like that. I think I'll use that.
Yeah?
I've been looking for something similar. And it's good how you can track all the different ones, right?
Yeah, exactly.
Rather than just how far it went.
Yeah, exactly.
Before it came back down.
That's it. All right. And if you guys, some of you want to know what it's like going to, I don't know, like 5% with a break even at 1% or whatever it may be, just let me know. I can help you put that together. I'm going to work out why this formula stopped working because that's really pissed me off. I'll work out what the formulas stop working, and I'll get a blank copy of that across to all of you. But I want you to all start filling it out. When you get up to about 50 trades on this, you should have a really clear idea of how your strategy performs. I'll keep you up to date with it. I'll post it because, you know, I'm trading. I'll take 1 or 2 trades a day, so I should hopefully in about 10 weeks have my 100 trades on it. And I think it's going to be really surprising. I think we're going to get some people that are more profitable if they hold for 3% and never go to break even.
Yeah.
I think that, you know, at the moment we're all being really conservative, aren't we? Right? You're all like, you know, you get to like 1% or you get to 2% and you go to break even. I would say it's probably the same for most of us. Yeah, fair. Yeah. And I think we're going to find out with this that actually strategies like holding for 3% and never going to break even, or holding for 2% and never going to break even, I think they're going to be, you know, they're going to be the most profitable strategies. It's going to be slightly different for everyone. Okay, it's going to be slightly different for everyone. I've put a column here for your trading view charts as well. Obviously, you need to keep your trade tool on until your trade is complete. Okay, complete is either it hits your maximum R, whatever that is. So for me, it's 4, or it comes back down to your -1. Okay, once one of those has happened, you then can record it and finish recording it on your strategy sheet. All right, finish recording it in your strategy sheet, fill out your sequence, and then it will give you your data. Okay, and I'll have this bit working. I'll have this bit working for you guys by the time I get it across to you. I don't know what's going on there.
Okay. Do you think it's best to record the pairs separately? Because obviously different pairs move differently.
It's really up to you. So for me, I'm testing my overall strategy now. Yeah. So I'm pretty happy with my consistency of entry. So I pretty much only trade 2 particular times of the day. I look for very specific things in my trade. I've got a very specific trading model. So, you know, I think if you're testing out different trading models, then yes, definitely. And if you're still new to different pairs, then 100% it's definitely worth doing that. I think what this is to test your trading model. The reason why it's not necessarily needed to, I'll show you why. Why it's not necessary. Just bear with me. Is because we can filter. Why can't we filter? Create a filter. You can't create a filter over a header containing vertical merges. Let's get rid of that then.
We're just going to try isolate the pairs that you've got recorded.
Yeah. So basically, I hate using Google Sheets. I haven't got Google Excel. I haven't got Excel. I've only got Google Sheets. Is it because that's on there? Create a filter. Yeah. Okay. So put that there. So what you can then do now is you can basically select all of your USD trades.
Doing it separately, right?
Yeah. See it? All right. And then you need your blanks
technology,
well.
Fascinating.
So, blanks in there. It won't update your formulas though. That's the only thing. So you'll have to manually work out what your formulas are. So that one's 3.44. So look, it's gonna be a little bit clunky. I'll keep working on it, guys, for you all the time. All right, and just adapting it because I only just got my hands on this kind of today. But yeah, in terms of how I think we can use it, I think it's going to be really, really helpful. And I think for those of you who aren't really sure where your profitability is, so, you know, look, I'm one of them. I don't know whether my strategy is more profitable going for 3%. I often come out of break even. I mean, that trade's a perfect example. I often come out of break even. So I took my first profit target at 1.8. I then got stopped out for break even. I think I had a high break even. I can't remember what it was, but I got stopped out for break even. And as you can see, if I had held it for 4R, yes, it would have taken a day, but I would have hit my profit target. How many times is that happening in my trading? I don't know. What this data sheet is going to tell you exactly when that's happening, and it's going to give you in here your best win rate and your best R rate. So when the guy showed it me, when I found it, when I went through it with the guy and he kind of showed me how it works, he found out that this strategy, his 3% with no break even, was the most profitable by like 30 or 40 R more than every other trading strategy, just by never going to break even and holding for 3% every time. So it's going to be a really interesting one, I think, and it's going to really help us. All right.
Yeah, sounds good, thanks.
Cool. Right, does anyone have any questions? Does anyone want me to go through anything? Does anyone want to look at any charts?
Nah, not really.
All right,
the
cool.
EU trade today was nice though. clean buy from like
Oh yeah,
discount
you got
prices.
in a little bit earlier than me, didn't you?
I got in well, like right on London Open.
Yeah.
Just,
I see. I was looking at that as well. I was looking at that, and I saw that little pullback there, and I was waiting for it to get underneath the daily open. So what I was waiting for was waiting for this to happen. I was waiting for it to get underneath the daily open, and then a little bit of congestion, and then get up there, right? That was kind of my plan. And as you can see, it just literally tagged the daily open, boom, and then went off.
yeah. Well, like my entry is like I call it. Well, I say FUMS or just FU's a liquidity sweep, but London does it comes down, and then it like. You get the momentum shown,
Yeah.
and then the entry was just like somewhere here.
Yeah,
But I still
nice.
put my stop right. Where's right below the low?
Yeah, nice.
I knew it
did
was
you?
like safe enough. Yeah, so I had what was it like a 12 pip stop I think roughly.
See, I've got no issue having a slightly wider stop when we've got formation like that. Like, there's absolutely.
Well, I used to trade, so I would have took it there.
Yeah.
With like a 3 or 4 pip stop.
Yeah. And
sometimes they'll win, but sometimes they'll come down, take you out, and then they'll go up. And
look at that. You missed out on an 18R trade though.
well, it would have been 10R would have been the target if I was doing 3 pips.
Yeah.
But that was from like data because London usually moves like 30 pips in a good session.
Yeah, fair.
So if you got 3 pip stop, then 30 pip move.
Yeah, get your 10R out of it.
But it was harder, just like frustrating getting taken out. When I know, like, just because the stops aren't as safe as they could have been.
Yeah.
Then like manipulation, right? Just
I'd much rather have a wider stop. All
it just works on days like today when it like initiates up and
then what you can do.
You never know, do you? You never know if it's going to or not.
Exactly. And then what you can do is you can then trail your stop. You can trail your stop up to there. And you know then that your trade's pretty safe. If you lose like 0.3 and it's a bit like whatever then, isn't it?
Well, that's what I did today. So I was aiming for like the trap and the high, and the weekly opens up here too. So it went there, but so I just held it for B here, and obviously it didn't hit. And then once it took out that New York high, I think here actually after I went trailed my stop.
Did you?
So I got the same profit as like taking it out here pretty much, but just in case, because I wasn't sure once it took out that high if it was coming down.
Yeah, fair.
I wanted to take some money, so I'm doing like a prop firm challenge. So.
Oh yeah, how you getting on?
I'm down like 2% drawdown.
Okay.
But
Tell you what to start doing. And this is a really, really helpful trick. Every single trade that you take, you've got to post your analysis in the group before you take it.
Yeah.
It will stop you taking.
Because when I was on holiday, I was trading on my phone, so I lost like 4% there. But I'm back. I've won like 2% on the 2 trades.
Nice.
That I have posted.
Nice.
And then
work.
I haven't took any more. I've been really like patient.
Just honestly, put your analysis in, and the process of the reason why Strong Money Forex kind of came about is because I wanted an accountability journal. That's why you guys are here. I basically I wanted somewhere that would hold me accountable. So I started a small group of my friends, and I basically just would put my analysis in before I took a trade, and it just made me more accountable because I'd start typing out shit, or I wouldn't type it out at all because I knew what I was about to say was just bullshit, or I had no like do you know what I mean? I had no like reason to take that trade, or it would just you know what I'm saying, right? That process of having to tell others why you're about to take that position, and just have that as a really blanket rule in your head, Chris, where you're just like, look, I will not take a trade unless I put my analysis in the group. If I'm happy with my analysis in the group, and then sometimes what I do is, and I will do this these days, I'll start looking at things, and then you'll see me, like, you may have seen it, I think last week, I took a trade, and I didn't like the look of it, so I just came out of it, and I was like, do you know what, actually, zooming out, or looking at X, Y, and Z, I don't want to take this trade anymore. And then you can really quickly, the thought process that you have to go through to make sure you're taking the right trades is really, really important. So if you don't have any kind of rules around that, this is one of your rules, and one of your rules could be make sure I post my analysis in the group before I take the trade. And then when you take the trade, you know you've got real clear reasons for it. And also then if I spot something, or Sam spots something, or one of us spots something that's really glaringly obvious, we can point it out to you because you might have missed it, you know?
Yeah.
All right, guys. Well, look, cheers. Good session tonight. Thanks for. It's good to see a lot of you, which is lovely.
All right.
Nice to see some.
Thank you.
Chris,
Yeah.
did you record this?
Oh yeah.
Oh, right, good.
Always.
Because I'm going to have to watch it 5 times to understand that spreadsheet.
if you want to jump on a call at some point, and look, if anyone's struggling with the spreadsheet, okay, and wants to jump on a call, then just give me a shout and we can jump on a call and we can talk through it. We can do another session at some point. It's no problem. Jake, are you there? Jake, saw you snuck in.
Well, go on, bro.
You're back.
I am back. Yeah, I've been driving the whole time, so I've been on mute.
Oh, welcome back, dude. Are we going to see you in the chat at some point soon?
Yeah, man. I've been busy with life and
Yeah, I know,
trying to run this carpentry business is doing my fucking head in and all sorts.
Fair enough. Well, welcome back.
But I've been trading. It's just been on the back burner.
Yeah, fair. All right. Well, good to have you back, dude.
Yeah, I will still be quiet in the chats because there's just all sorts of other stuff going on. But I'm glad to see it's busy and everyone's moving nicely.
Good. Well, good to speak to you, dude. Right, the rest of you lot, on to tomorrow. Let's have a look at tomorrow quickly whilst we're here. Have we got any news tomorrow? Can anyone have a quick look at the news for me? We've got
Yeah, okay.
EU right now. We've got a clear target, which is up there. Okay. I don't see any reason. So this is, remember what we spoke about, liquidity trend lines. Okay, this is clean liquidity. There's no manipulation. Every single one of these highs right now is clean. Okay, it's not being manipulated. Okay, and what that means for us is it's clean liquidity. What we don't like is dirty liquidity. Dirty liquidity is like what we've got at the moment on the other side. So every single one of these, no, that one's been manipulated. Just delete that. Okay, every single one of these is untested at the moment. Okay. The reason why that's good for us is because that's attractive liquidity. Okay, that's liquidity that has not very much money sat underneath it, which means it's an easy target. Okay, so, or it hasn't had as much money to create it, basically, so it's an easy target. Liquidity like this, however, where you get these big, massive moves that take out major swing points or significant points anyway, that, so here to here, for example, that is dirty liquidity, very naughty and dirty and horrible. Because that is more difficult because it's taken a lot more money to create that move that's taken that low than it has to create that move that hasn't taken any liquidity that we can see on our chart there. Okay, so dirty liquidity, clean liquidity. And we like clean liquidity because it's attractive for price. So pretty much guaranteed we're going to take out that trend line. And as I'm saying that, I've probably jinxed it. So if it doesn't happen now, apologies in advance. If you are in a trade long on Euro USD, apologies if I screwed it for you. But I don't see any other option. When's our next 1:30 news, Chris? Or if anyone's got the news there.
Not tomorrow.
I think it's Friday, isn't it?
Thursday, unemployment. Oh no, sorry. Yeah, unemployment.
What, 1:30?
Yeah.
Okay, so we haven't got any major significant liquidity until then, which means, I mean, I don't really see any reason why it's going to reverse from where it is now unless we get a big news event. And I don't see unemployment having a massive impact on price. So where do we go from here? It's a big question mark, isn't it? I think what I will personally like to do, because we've had such a good start to the week, Euro USD and GU. So GU, I didn't take that trade, but that was a lovely trade from, was it yesterday? No, today. Beautiful trade. No, that was the same GU setup. Beautiful trade on GU. Didn't take that one. Bit high for me. Me and Sam were talking in the chat earlier as to why we didn't take that trade, but that played out really, really nicely. Prices are really, really high at the moment without any kind of, significant pullback. You jump up to the 4-hour time frame, we've got some really, really high prices. So I'm gonna start to want to see something like this. Okay, so we've had a really nice pullback today on GJ. Really lovely pullback, as you can see there. So that's prime now. So for me now, I'm looking at GJ and thinking, do you know what, GJ is probably my pair that looks best for tomorrow. I'm already starting to see that. Okay, if we can continue getting this sort of bearish price action overnight, maybe take out Asia's low tomorrow, and then we can trade that back up. So GJ looks really, really clean. Really, really like a look at that. The DAX. Want to do testing on, guys. I've been doing a bit of back testing on this lately. Again, I'll come back to you when I've completed enough trades that I'm happy with the results. But so far, I mean, I'll just show you the 4-hour chart. Can anyone see how clean that looks? I'm talking about like liquidity order flow. Okay, if you look back at another 4-hour charts, none of them are this clean. This pair fucking loves sweeping the 4-hour time frame and it fucking loves rejecting it really, really well. Okay, these sweeps, they are just beautiful, and they happen over and over again. I know, Sam, you've been trading this for a little while, haven't you?
Yeah.
Do you talk to us? Talk to me. I've started looking at it
very well.
You trade
Our strategy does very well.
Yeah.
Just said it yourself there. The sweeps on it are unbelievable. But I mean, it's more for me. It's more of a higher time frame sweep.
Yeah.
You get quite a lot of consolidation on the lower time frames if you start to mess about with that.
Okay.
Think about New York today.
Yeah.
Other than that last bit of expansion, there's quite a bit of consolidation in there.
Then the trade I took. So the trade I took. I can't see because you guys are in the way. Let me just move you guys out of the way. Trade I took. Bang on between 230, 330. That same pullback, right?
Yeah, that had been because of the New York Open, wouldn't it?
Yeah. So, yeah, that was, ended up being quite a nice position. But, I'm just looking back over it, and it just seems to really respect the liquidity, and it seems to react really, really nicely. You have multiple times where it's coming down, taking that liquidity, rejecting, really, really clean order flow. It seems to really adopt momentum, and then you've got here you've got your, if we jump to the 15-minute, because that's where I'll be looking for my sweeps from, getting these 15-minute sweeps, and then jumping into trade. So look, I'm doing some testing on it at the moment, but so far it looks pretty fucking fantastic, and it just seems to consistently give these really nice setups where it sweeps a significant point and then gives you a nice setup to trade off the back off. So yeah, look, it's coming out really, really nicely, but definitely want to keep an eye on. In terms of where we're likely to go on that, again, really bullish. Everything's really bullish at the moment. Gold is just off on one. Gold, that was a huge trade. I only had a little position on it, but I ended up getting a full 2R out of it. And it's made another all-time high, 2657 at the moment. Massive. When is gold going to stop? And again, Sam and I spoke about this earlier in the chat. Looking at reasons to go short. That old saying of buy low and sell high, that applies to higher time frame trading strategies, guys. Okay, when you're trading on the lower time frames, you need to understand that it doesn't really work as effectively. If prices are high, it means that there's a high volume of buy orders. Okay. And the market is moving in that general direction. If you look at, so if I open up a new tab and I type in gold market sentiment right now, okay, everyone will be short, okay? So 74% of traders right now are short. Only 26% of traders are long, okay? That's the current metrics. So think about liquidity. Okay, think about volumes of orders. Okay, where are the mass orders going to be at the moment, right now? Let me do a replay tool. Imagine we're down here. Hang on. Yeah. Imagine we're here. Where is the mass volume of orders going to be sat right now? If 74% of people are short, 74% of traders are short and 26% of traders are long, where is the mass volume of liquidity going to be sat?
Love that high.
Above that high, right? They're going to be sat here, and they're going to be sat here. Okay, that's where, because this has been liquidated. This has been liquidated. Okay. Yes, there's going to be a lot of liquidity down here. Yes, there is going to be lots of liquidity down here, but it's going to take a lot more cash to move price in the opposite direction. Okay, and that's what you've got to remember. It's easier for it to continue in one direction. Therefore, the easiest liquidity to take is the buy side liquidity. Okay, that's why it can continue to move long even when the majority of traders are short. Okay, because these positions, 74 of the Forex traders are currently going short with an average price of 2483. Meanwhile, 26 of the Forex traders are going long with an average price of 2527. Okay, so this is their lots short. This is their lots long, I believe, that way around. Yeah, bids and ask. Okay, this the positions that have been taken. Okay, the market sentiment is so heavily bullish. Okay, yes, it looks like, and that's why I took this trade earlier. Yes, it looks like we're set for a correction, set for a pullback, but look at all of this price action. You've had, that kind of FOMC move there, but look at all of this. If you've been just going long on gold for the last month, you'd have been doing really, really well. Yes, you might have lost on that trade, but you would have caught your money back here. Yes, you would have lost on this trade, but you would have got your money back here. Yes, you would have lost on this one, maybe on this one, and maybe on this one, but you would have got your money back here, all right? You might take a string of losses there, but you can easily make your money back. So when the markets look like this, guys, just keep buying. Don't expect reversals, okay? Don't watch for reversals. Don't say, well, we've had a sweep of liquidity on the buy side and a bullish push or bearish push, so it's going to go short. Remember, for you to trade this short, you need your higher time frames to line up. So the only time on gold that you could have traded it short would have been in here and in here, okay? Because you've got structure on the 4 hour, and not very good structure at that. You know that that's just pullback structure. But you can then go into that section of price and you can then find setups, right? You can find setups, you can find sells. You can see one there, you can see one there, you can see one there. So there's 3 sells in there that you could have taken. But it would have taken you a couple of days, or maybe a good, it would have taken a couple of days for you to get a clear indication that it was going short anyway, before you had your 4 hour ranges lining up with each other. Okay, so if we look at the ranges from here, so ranges, so that's your bullish range right now, okay, right there, and you're looking at internal structures. The reason why you know that this isn't, a really significant movement in price is because this is internal to the higher time frame bullish range anyway. Okay, so those are your ranges. So you don't actually get confirmation until there anyway. And then you get FOMC anyway, and it reverses back on itself, and you're back in the bullish momentum. And again, another perfect tag, or almost perfect tag into 50%. Gold loves doing that, coming down to about 50% and then fucking off. Does it all the time. Down 50%, fucks off. All right, so keep an eye on that. But yeah, look, long story short, right now, gold, just keep longing it. There's no point in doing anything else. Just keep longing it until it's clearly shows you. Now, I'm not saying you buy it up here, because that would obviously be a bit stupid. But like happened today, we had a bullish push, then a pullback, sweep of liquidity, Asia liquidity, another push, and then I got a second opportunity there. Just a gimme that was really. Second opportunity there, stop below the low, came out, I took out my profit. I was only in on it a tiny little bit, just because I'd hit my target for the day, so I wasn't fussed about it. But that could have been potentially a 4% trade that I took there. So really, really lovely position on gold.
Can I ask a question about that trade, Jack?
Yeah, of course you can.
See, like the momentum coming into it before you enter.
Yeah.
Does that not put you off?
No.
No.
No. So what I was looking at is, I'm looking at for my last key liquidity, okay? Yeah. And have I got
I understand the trade. It's like a beautiful trade. Just in the moment, I know I'd be like, oh, it might be coming down to take this low where my stop's going to be placed.
If you were taking that, I'd completely agree with you.
Yeah, you
That's
were
why
like playing the reaction away.
Okay, so I wait for that liquidity, had a really clear ISC, okay, and then the perfect setup was ultimately here. That was the.
It's like range liquidity on that low time frame range as well, right? Your entry, if.
Yes, yeah, internal liquidity there. Yeah, you're right. Yeah,
like
so
new leg and then like range liquidity and
exactly,
MSU, right? Yeah. Fractal.
So that would have been the perfect entry there for me. Okay. It's actually a worse entry waiting for the MSU on that situation. What I then saw is I saw this pullback, and you're absolutely right. Took internal liquidity here, okay, which yes is range liquidity, so that would be our range. The reason why I wouldn't class this as a range ultimately is because it hasn't taken the high, so it's an internal range. So I'm not too fussed about marking it on. I just see it as an increase in momentum, and then I'll draw on my liquidity level. And then for me, then I was waiting for a clear indication that would go long. So I had to wait for a structure change. So I'm looking at my internal ranges. I then get structure change, and then it was that sweep there that signaled me into the trade.
Yeah,
so that was my MSU.
It's a lot cleaner when you go down on the low time frame, right?
That was my MSU. And then I waited for, so I did have an engulfing down here technically. That was my engulfing down there. I waited for that whole section of price. So you see that? So if you look at the real intra kind of 1 minute time frame, okay? I then waited for that little section to be engulfed basically.
Yeah.
And that's where I got into it. And again, it was only a little gimme trade. I took most of my profit off here at 1.4, and then I took the rest of it off at 2. When I say profit, I put on like 0.01 or something on it. It was basically as a paper trade, but it played out beautifully, and it carried on going, got my 4R. So what I then did was, I'll use this example. So entered the trade, okay. My profit I took off was at 2. Okay, but as you can see, it went straight to 4. Okay, so on the strategy over here, profit went up to 2 and then went up to 4. I think, to be fair, you could just probably put that at 4 because there was like little to no pullback. So I think what you do is you would do that one. So that's 1.6. 1.6. Then the pullback was to here. So 0.6. 0.6. Okay, and then 4. Okay, that will then obviously update your strategy. Okay, see that there? And obviously it's I've got the max because it's, you know, it's gone all the way up and it hasn't hit any of the break-even points. Or has it? 1.6, 0.6. Yeah, no, and okay, right, yeah, so I confused myself then. So the reason why none of these have been hit is because the first push only went to 1.6. Yeah, so we didn't go to break even at any of these other than this one, and it didn't come back to break even, so I still got my 2. And this one, and we didn't come back to break even, so I still got my 1. This one here, break even at 2%, it didn't hit because I'm going to break even at 2%, and we didn't get to 2%, you see? Okay, and we didn't actually come back to, sorry, it's been a long day. We didn't actually come to break even, we came to 0.6, being daft then. I was thinking we didn't come back down to 1, but anyway, you see what I mean? Long story short, it's going to work out the profitability of the trade for you, and yeah, that was a really good trade, ultimately, for our beautiful, should have held it, never mind. Great, all good?
Well,
Any questions? Any questions for anyone, or we're good to go?
Not for me, thank you.
Cool. You're welcome.
Cheers,
Right,
Jack.
I'll
See you
get
later.
this. I'll get this uploaded. I'll get the spreadsheet uploaded. I'll leave my data in it for now. I'm gonna work out what's wrong with that win rate, and I'll put my data in it for now, and then go from there, guys. All right?
How's your back?
Oh, better, thanks, dude. Yeah, much better. I'm kind of back to normal now, which is decent.
Yeah.
Yeah.
Well, good.
So, yeah, I'm off the medication. I got back in the gym day before yesterday as well. Not really lifting anything at the moment. Just kind of got in and just moving about. Mobility work mainly, but yeah, other than that, I'm back to normal. Thank you.
All right. Cool.
All right, dude. See you later, guys. Thanks for joining.
Thanks, Chris.
You're
Thanks.
welcome anytime. Cheers.
Cheers,
Bye-bye.
thank you.